When you're trying to get an offer accepted in this competitive market and the listing agent knows who you are, they know they can pick up the phone and call you, they know you're responsive, you have a great reputation, and you have that offer, and then you have one with a lesser known quantity or a big box bank or corporate national thing, this one's going to be thrown away.
Hey, bud.
What's up?
Thanks for coming in. How you doing?
Thanks for having me.
So, it's interesting. Guy that you work with, John Downs, I saw him post on Twitter, like some kind of data piece came out where like things are really slowing down. Yeah, shocking, right? The last 2 weeks. Do you even know what data point that was? And are you guys seeing it?
John is way more the data guy.
Yeah.
I just do loans, so I think he'd probably rather switch with me. But for the most part, is trade war tariff drama. I think it was like April 4th, and the bond market just imploded. Kind of with the stock market with everything. Usually when one does bad, the other does well, but both of them just went.
Both went out, which is very rare historically.
Oh yeah, for sure. I think that week alone, the second week of April, was like the worst for mortgage rates in a single week since like 82. Which, crazy thing is, the way Freddie Mac puts out rates, that Thursday of that week where they were just getting demolished, they put out a thing saying rates dropped because they're always a week behind. They showed last week's data. And no, I mean, it's always been a contentious part in the mortgage business. We're like, damn, Freddie Mac, like get with the times. Like this, you're not printing in the paper. Yeah, exactly. But no, they're going to show last week's data. So in the worst week since 1982, Freddie Mac said rates went down. And it's just...
How much did they end up going up from the low, during that week?
I mean, we had a really good week the week before. So that's what made it a little more dramatic. But I mean, it could have been 0.75% to possibly even a full percent, depending on the parameters, right? Like,
were people when they were low? I mean, because I always wonder this, were people locking in, or are they still as a waiting game? Oh, this is just the beginning.
I didn't have anybody not lock in.
Okay.
But I don't like to play that game either. When it's a purchase, I want them in, I want them locked, because I don't want that. There's not enough time.
Sure.
If things go south, if your rate went up 0.75%, are you going to stick in that transaction? Yeah, I mean, if you have an out, you're probably going to take it.
Yeah.
So I don't like to play a game with purchases. Yeah, you get people on the refinance side for sure. They're like, I think they're going to go a little further down, and then boom,
and
like it's gone.
And that happened, I think, last October,
September,
right?
Yeah.
Or is that what it was?
Absolutely.
So I remember like this one guy in this company locked all his clients in. He had like the best month he had of the whole year.
Oh yeah, if you could get it in those couple of days, it'd be great. But yeah, people are greedy. It's hard.
I get it.
It's a gamble, right?
It's like, it's got to go lower. It's not going to only be 2 days. Oh, no.
Who gets up from the blackjack table when they're up?
Exactly.
You got to start going down before you walk away. It's just like, all right, well, I could save 300, but I could save 400 if I wait a little bit longer, and then it's gone.
So situations like that where you do lock in, and let's just say it does drop another half a point or point. Like, where are we at now in terms of like, can you go lower still at that point, or how does that
You
look?
can. So every lender out there is going to say they have a renegotiation policy.
Yeah.
And the reality is there is no such thing as a renegotiation.
Okay.
But the way mortgages work, like when you lock in a rate, it's not really locked until it's securitized behind the scenes, like after closing. That's when it's truly locked, and it's put into a pool, and it's securitized with, like, let's say Fannie Mae, Freddie Mac. But what a company does when they lock you in is they hedge. So they'll short the market essentially. And if the market gets better, they sell the loan for more, but they lose on that hedge.
Gotcha. Okay.
But it levels things out. So, but what happens is if rates go down and a mortgage company has you locked on the hedge and then you leave, they lose on the hedge, but they don't gain on the sale.
Okay.
So they kind of have to have a policy to say, look, we'd rather just lose a little than lose a lot.
Sure.
So that's where that comes in. So
there is a cost to it for the mortgage company.
Yes.
The lender. Wow. Okay.
Yeah, the lenders don't want to do it, but they have to, because again, you'd rather lose $5,000 than lose $15,000, right?
Yeah, that makes sense. You said you're just a loan officer, but you are just a loan officer that has originated billions of dollars worth of loans. You've been in this for a little bit.
Been in for a little bit.
Yeah. Give us the history
of
your career.
I fell into it by accident. So I was going to University of Maryland, and I was bartending. It was TGI Fridays, which I liken more to like cocktail TGI Fridays rather than just your chain restaurant. But the amazing thing is the number of loan officers that used to come into this Greenbelt, Maryland TGI Fridays was crazy. It was the happy hour spot. Greenbelt, Maryland, I guess, had cheap real estate as far as offices go. Right. So every mortgage company had a had an office there. And they would come in. And there's one guy that was always like, you should get into mortgages. And I'm like, I'm having fun. I'm bartending. I'm going to school. But my mom was in real estate and he was always looking for new people. So I graduated Maryland. I'm still bartending and I criminal justice major. So I was thinking Secret Service, FBI, something like that. I always like to spy on people and, get behind the scenes. And I put in applications for that and that was going nowhere. So
I heard it's very, very hard. And takes many years for some people that do get it.
I'm still waiting.
Still
23
waiting.
years
Yeah,
later,
look at
and I
that.
still haven't heard on my application. So I was like, well, I need to do something. I need to stop bartending because I was a little out of control, up late all the time. And if I wasn't bartending, I was at a bar. So I finally go to this guy and I'm like, all right, man, I want to give this a try. And he essentially said, look, I've just lost 2 loan officers that I had hired as bartenders. So I can't hire you. He's like, his words essentially were, go get good somewhere else and then come back and talk to me. I mean, I was like, are you kidding me? Like, I finally get there and you're going to tell me, go get good and come back to me. Yep. So it became a joke because I did get good fairly after that.
So you didn't talk him into hiring?
I did not. I went with another company. So my mom's been in real estate since I was probably 40 plus years down in Southern Maryland. And she's like, well, talk to the people that I use. And turns out the guy that ran the office was stepfather of one of my high school buddies. And I had never met him before, but I drank plenty in his basement. So it was a great fit. So that just kind of progressed from there. Come back full circle. And the guy that originally told me to get good, he's all over me, wants me to come work for him. And I never could do it.
Never happened.
Never happened.
So you get into the business, no experience at all. I look at it in today's world and I'm like, is now a good time or a bad time for a loan officer to get in? And, it's a tough market right now. So what do you think?
It depends on the person. I think in our industry, it's all about relationships. And if you're good at that, you want to work, anybody can do it. But I don't want to talk bad about generations or anything like that. But the younger generation doesn't seem to want to put in as much effort. And I don't know why that is. We've hired a handful of young people. And maybe this is just the way it is in any industry. Right. But 8 out of 10 of them will go have a meeting with somebody, be like, that's great. And then they just come back and wait. Yeah. And they don't do anything else. They're like, well, I just had a good meeting. So I'm going to start getting loans. It's going to happen. Instead of, while I'm waiting for that one, I need to go to the next one, go to the next one, go to the next one. But we do have 2 young guys that are working for us now that are go-getters. You hear them on the phone. They're anxious. They're aggressive. Yeah. And I love that. I think that's what it takes. So I don't think any time is better or worse. Well, 2008, 2009, I saw the biggest jump in my career when the markets were absolutely imploding. Sure. But that's because everybody was stressed out. Loan officers had finished a refi boom, so they weren't out prospecting at all before that. Yeah. I didn't have any business, so all I'm doing is going out with realtors, going to lunches, doing happy hours, doing all the little stuff.
That's what it takes.
And then they start doing business because they were kind of new too, so they weren't all upset about the global financial crisis and how they blow up. And looking back on that, I didn't know any better. Yeah. And so to some degree, as hard as it is right now, if you're getting into it and you want to work hard, you don't know any better. And it's only going up from here.
I agree. If you're following, it's like you said, the little things still work. So, Kat Hoke is, on our team, and she had been out of sales for, had some kids, was out of sales for 7 years. And now I think she's the fastest growing title salesman in the country. She's out every day, coffees, whatever, and it works.
I just met her at an MBA thing recently, and a lot of energy.
A lot of energy, right?
But that's it. It's relationships, and it's, people like you.
Yeah. And then on the generational thing, I got a very good success story here with Caitlin. So, because yes, there's definitely people that we hire and I'm like, I wonder if it's a generational thing. But then Caitlin comes on and crushes it and sets up this whole studio and launches a podcast and never complains and does awesome things. So then it's like, you know what? Maybe it's not generational. Maybe it's a people thing, so.
No, that you're probably right.
Cool. So when did you move to Vellum? How long ago was that?
So back in 2017, probably when I first was approached about this idea. I didn't go there until November of 2018, but I was working at Caliber Home Loans at the time. Yep. Great company. Loved all the people I work with. When you're happy, why would you even consider making a change? But Patrick Gardner, one of the principals of Vellum, was in my ear about, let's do something different. Let's do something new. You want to try this. Come over here. Let's build it the way we want it. And it took him, if you ask him, I'm responsible for 99% of his gray hairs because he was all over me.
Yeah.
And I was like, all right, I'm in. And then I'd sleep on it. I'd be like, nah, man, I'm sorry. I can't do this. And then next week, I'm in. And then I can't do this. I mean, I think if I didn't actually go there, I think he probably would have put a hit out on me just for the ups and downs I put. So I go over there and it was just everything made sense. Like when you have a large corporation, you have to have rules in place to manage the masses. When you get small, you can have more open systems. You can let us manage ourselves.
Right.
Because if you know what you're doing, you're not going to get yourself in trouble. And then if you take down all the roadblocks, it makes it easier for you. You never know until you jump into something and you play it out for a little bit. So, 6 months later, I'm just like, if I knew I could, my life could be this easy doing loans. And it's not easy, but the level of there's just not the same roadblocks.
Yeah.
And I would have done it 5 years earlier. I mean, Vellum didn't exist, but to that point, I kicked myself because I was just content.
Yeah.
And I didn't need to rock the boat, so I was fine. But then once I took that risk and went out and got out of my comfort zone, I was like, oh shit, this is great. I owe Patrick at this point for sticking with me and pushing me to do it.
Nice. Do you guys have an office in Annapolis? And I don't know who told me this recently. It just popped in my head. I mean, most of your business DC area?
It is.
Right?
I'm pretty much around the Beltway.
Yeah.
You go to where the business takes you, not where you want to be.
Sure.
And so I started in Southern Maryland just because that's where I grew up. That's where I knew people. And then our good buddy Jason Martin, he moved from North Carolina into DC to be a realtor. So he kind of drugged me in there to start working with him doing some stuff. And I met other people. And then it just morphed from there. So I never have I've always lived in Maryland, but most of my business has always been in there. And that's what I learned, which is funny. Now I have an office in Annapolis that I go to, but I don't do any business in Annapolis.
I was going to ask that. Has it started to create business over time?
It hasn't, but that's more on me than anything else. You get complacent because you're doing
happy hours every day, the lunches, the breakfast. It's tough as you get,
Exactly. Now, down the road, would I like to expand out and grow a little bit? Actually, probably not for myself, but I want to help the guys in the office. Like I said, we have this one young kid that's super aggressive and he's just like, well, I want to do this. I want to do this. And I'm like, all right, bring him in the office. I'm going to help you. I can sell you better than you can sell you because talking about yourself is much harder than me talking about you.
Right.
So
Annapolis is a weird market though, right? I mean, we have a salesperson there. We haven't seen a lot of traction there. There's would you call it a few big teams? And then it's kind of very scattered outside that.
Well, I feel like Annapolis is a very network, like a close network. So it's, you live in Annapolis, you're Annapolis, you work with Annapolis. The difference in DC is there's a lot of transplants. So it's not, you don't have lifers. I mean, you do have lifers, but it's not the mainstay of everybody. Where you have that agent that's been in Annapolis for 40 years, and they know the players in Annapolis. That's kind of what they want. We're hoping to expand to the Eastern Shore out, Ocean City, Delaware, Rehoboth. And I was talking to some loan officers out there that we'd love to get to come to Vellum, and it's just a lot of the same thing. They're like, you try to submit an offer with a lender letter from a lender that is across the Bay Bridge on the Western Shore. Listing agents don't want it. They don't want to look at it. It's I want somebody here that I can touch and see. And it doesn't matter how good you are. I want local. So I think Annapolis is very much like that too. I think DC is just continuous. It's just a transient city. So people are used to, nobody seems to be from here.
Yeah, that makes a lot of sense. Nice. So you guys have been doing some good video stuff. I've been following your stuff. I think we have similar senses of humor. In fact, one of the videos you did, I think I wrote down one of the videos, we should do this. And then you guys released it. I'm like,
that's the Jeopardy.
Yes, that was the Jeopardy. That was good.
Celebrity Jeopardy.
What are you guys at in the video front? I mean, you're still doing as much as you did before?
So we hadn't been. So to be candid, I was never going to do video. I do have a very sarcastic mindset, and which is funny when I talk to people, they're like, I didn't even realize that about you because we don't get into that much in the relationship side. Like when I'm just talking to clients and doing letters and giving updates, there's no personality in that.
Right.
But I'm never been one to be in front of a camera either. Like everybody, don't like the way I look, don't like the way I sound. Let me wait till I lose 20 pounds and then I'll look better. It's never going to happen. So I had a girl on my team for a little bit and she was pushing. We got to try. And I finally just said, all right, you set it up and I'll be here. And that made it easy. And when she did that, the first ones were awful. I mean, they were bad. They were very cringy, but it was all informative stuff. And which is good. But people don't want to see that. So then we just started having fun with it in the office, and it became get everybody in the office involved.
Yep.
And then it just builds some culture, and it's fun.
I mean, I think it builds culture. I think it attracts possible people that come to work for you. People get to know you. So you guys do become more likable.
Absolutely. They see a different
Yeah.
side of you. You become more humanized.
Yeah.
You know, it's easy to hide behind the computer and email and
Yeah.
you know, text messages and things like that. But when people see you as a person, it really goes back to like something I learned in coaching. He was always the loan officer with the most friends wins because your friends want you to do well.
Right.
And when your friend, like, you know, you guys have tons of agents that work with you. You guys do an exceptional job of events and bringing people together and not just, hey, here's your signing documents, move on.
Right.
Maybe you're not going out to brunch every Sunday, but you're still friendly.
Yeah.
And those friends want you to win. So we're like, hey, let's use Allied for this. That's what we, you know, hopefully that's what we want to have too is the realtors that work with us are friends and they want to see us do well.
I mean, a lot of was some of the motivation, video power stuff that Jason Martin put on. And by the way, AI, this is something really interesting. Like, obviously, people have been talking about AI forever, but I've just started to get educated more on like the depths of AI and how you can, if you pay for the premium plan, you can after every meeting, you have a conversation with it and it gets to know you better. And then you say, hey, you know, send an email to this person, but include my, you know, license number at the bottom of the email. You didn't do it last time. Oh, sorry, I'll do that next. Like you're having real conversations with this thing. And apparently there'll be some great strategies on like how to produce more and how to get more sales and all that stuff. So I think it'll be good.
I think it's going to be a good one. What most people don't embrace AI yet is because they really just don't even know where to start.
Yeah, exactly.
And I think having an example of, well, here's how you start. Here's what you do. Yeah, it's funny. Even in the most simplistic form, just in my world, like, hey, AI, will you write me a letter to explain this from this borrower in a way that's a little more heartfelt or whatever? Like, they had some blemishes on a credit report. Make this seem whatever. And it's awesome.
Unbelievable, yeah. So I had Untitled sponsored Little League team for my kids. I was like, hey, we made like a logo. It's just like, it didn't seem right. So we got on ChatGPT. It's not fun enough. Oh, it needs more depth to it. Hey, it needs, and then they did everything. They designed it. I mean, ChatGPT designed our logo that we use. It's just unbelievable. I was talking, do you know Greg Share?
I know of Greg.
Yeah.
I've met him like once years ago.
Gotcha. I did not know him. I just had him on a podcast yesterday. But he does 365 posts a year. And I was like, how much are you using, you know, ChatGPT? He's like, I have an article right now with, you know, many thousands of views. It was comparing Rocket versus United Wholesale's earnings reports and talking about the pros and cons, and ChatGPT wrote the whole thing. And then on top of that, I created a thumbnail on LinkedIn all through the system. It's like I just kind of reviewed it, tweaked a couple things, and now I've got whatever 10,000 views, 20,000 views.
Well, here's another example. Like you don't know where to start with video, but you want to do something fun. ChatGPT, write me a script that's like The Office.
Yeah,
and you know, here's the 4 people that are going to be in it, and they'll make them characters from The Office and make the skit about real estate.
Yeah.
You end up with something really good. I think that's the problem with most people. It's like, how do you get your brain started on something? Sure. And ChatGPT does it.
All right. So what are you guys seeing right now? Year over year, up?
Year over year is up. You know, honestly, until the whole tariffs mess had its impact on the market, the optimism was
very high.
Probably very high for where it's been. I mean, I think as a company, Vellum is going to have its best month since 21, 22, 23, 24 was just a disaster, but it was a positive sign, right? Like this is the best month we've had. The last 10 days has been a little disheartening because of what the markets have done. It'll settle itself.
Yeah.
And, you know, at some point we're going to keep going in the right direction and stay in that direction.
Yeah.
We've been really lucky over the last 20 years with the markets that we've had. And this one's been brutal, and I think a lot of people will learn from it.
Would you say that the last 3 years was worse than the housing crisis, wasn't it? 2008, 2009?
For me, it was.
Yeah, I've heard most people say it was because there was just more volume back then. There were still transactions occurring?
There were still transactions, and I mean, so the difference there is the rates weren't as high as they are now, but prices were also going down, and prices haven't gone down because there's so limited inventory that there's enough people that are going to pay the high rate to gobble up anything good that comes out.
Yep.
So with rates up and prices up, where 2008, 2009 rates were a little bit elevated, but the prices were coming down because there was a flood of inventory, whether it was foreclosures or what have you. There was just a lot more people selling, getting out of their toxic mortgage or whatever it was.
Yeah, that makes sense. We do have a rapid fire. One thing that instantly makes a bad realtor stand out.
Sloppiness. And what I mean by that is my worst realtors will introduce the wrong person and introduce me as a different lender, and just misspellings and just pure sloppiness, like not paying attention.
One business rule that you never break.
I don't like anything to go unanswered really ever, but it has to be quick. When I get to 0 email inbox, I slept so much better at night.
Biggest difference between working with Gen Z millennial buyers versus baby boomer Gen X buyers.
I would say technology, the ease of technology versus one. Let's go baby boomers, Gen X are more trusting. They want to talk through something. They value your information. They value the relationship. Millennials more so want fast information, and if you don't get it to them, they're going to get it somewhere else, and they'll use the information, and then it comes down to, let's crunch to the tiniest penny.
Yeah.
And I'm going to go that way.
Crunching to the tiniest penny. It's a struggle for almost every loan officer. Then every once in a while I hear someone say, "Oh, the way I structure my business, I don't usually get chopped on that." I find that hard to believe because I will say an eighth matters, or a quarter matters when you're looking at a 30-year loan and the amount of savings.
I've had somebody buying a $2 million home go with a different lender over a $200 fee. One phrase that I can't stand with that is, I got to look out for my family.
Yeah, exactly.
I'm like, you didn't have regard for my family when you called me on Sunday and needed these numbers on a rush, and because your other loan officer didn't answer, you got a letter from me, and then on Monday you called them and they were able to match it or beat it by a little bit, and you're like, oh, I'm going to stick with them. Like, all right.
I've seen the soul of loan officers leave in the sense of like, I'm done with it. And I can understand it. You work so hard, you're working on the weekends, you get them what they need, and then when it happens over and over, I'm sure it's just absolutely deflating. Realtors always say location, location, location. What should lenders always say?
Yeah, in a way, it's actually the same. I don't think people realize how important it is for local when it comes to the loan officer. But I think a lot of times it's not explained in that way. Has nothing to do with the fact that I'm here, but when you're trying to get an offer accepted in this competitive market and the listing agent knows who you are, they know they can pick up the phone and call you. They know you're responsive. You have a great reputation, and you have that offer. And then you have one with a lesser known quantity or a big box bank or, corporate national thing. This one's going to be thrown away. I don't think buyers totally understand that, that getting the house sometimes is who you're using, not so much who you are.
And agents sell that philosophy to their buyers. I hear them say it all the time. It is like, hey, if you're going to DMV, you need a local lender. Brought up Rocket, and the guy I had on yesterday was talking about Rocket. He had the CEO on, and they have so much business, but they don't win a lot of business around here.
They don't.
Why can't they compete on that with the local lenders? Is it an underwriting issue?
Well, it's a lot. Underwriting's part of it. So if I'm at a broker, which is generally what I have to do to go to Rocket, I have to package up my file and send it to them, and it's going to go to an underwriter I have no relationship with. And they're going to introduce themselves. But I can't pick up the phone and move things around. And then there's just differences with understanding like local programs. And I'll give an example. We had somebody with tax abatement recently, and it became an issue with the outside investor on the loan because they didn't understand it. And, so they were about to not allow them to get the credit, and we had to finagle it and make it work. But it's understanding the local markets. And then when you're a large national company, so appraisals there's a lot of compliance around how an appraisal is ordered, how it's managed. And so small local companies will have their own panel. And so I can't pick the appraiser to go do it, but I can pick the people that are on my panel. So I know they're people and I can say, okay, Michael is a great appraiser in zip codes 2009, 2010, and those are the places where he gets it. When you have a large, like national, let's not to pick on Rocket, but Rocket. So they can't have all those. It'd be impossible to manage. So they get an appraisal management company that just does that. Well, now the good appraisers don't want to work for an appraisal management company. company because the
Right.
appraisal management company takes like 30% of the fee.
Yep.
So now the only appraisers that are working for the appraisal management company are the ones that it's either the only way they're getting the business or they're just brand new. And you might get somebody from Baltimore that's going to
Yep.
drive down to Capitol Hill because they're like, well, I don't have an assignment right now, so I'll take this one and I'll take the $300 that they're going to pay me as opposed to the $600 that a local appraiser would have gotten.
Yeah.
So now you get somebody that's coming down to Capitol Hill and they're just like, all right, well, I'm just looking at a map and I'm going to pull some comps, not realizing that 3 blocks in one direction is totally different than 3 blocks
Sure.
in the other direction. So that's why you get a poor appraisal from somebody that just
Yep.
doesn't know the market. And the reason they're going there is because of cost.
Yeah. I mean, I think that's one of the best, and I want to keep building on this too, but that's one of the best descriptions, granular explanation of why a local lender is important. Anything else to add to that too?
No, I mean,
On the local side?
those are the big things.
I mean, they're
It's-
huge.
yeah. No, I mean, it's appraisal, it's speed, and it's reputation.
Mhm.
When I talk to a client, I tell them my goal is to put you in the best position to win.
Mhm.
And I'm going to talk about waiving appraisals,
Mhm.
like what that means. We're going to talk about waiving finance contingencies and where the risks lie.
Mhm.
Because if we can make you the most bulletproof buyer you can be, then I'm doing you a favor as opposed to, another online lender better. If you've ever looked at a better mortgage pre-approval letter from somebody that went online,
Yeah.
it actually says in fine print, this approval is based on information provided by the borrower online, not documented.
Yeah.
They just typed in, I make $110,000 a year.
Right.
And they're like, okay, well, if you made $110,000 a year, then you're going to qualify. Well, then turns out they're self-employed and they
Mhm.
wrote off 50,000 of it
Yeah.
and they really only made 60.
Right.
And now they don't qualify. And they're like, well, I mean, the letter said,
Yeah.
and it gives them every out in
Sure.
the world.
Yeah. I mean, I see a lot of times too, people are reading online quotes. They're just seeing this percentage and they're not seeing the points. They're not seeing other things. And it's just, they don't understand what they're looking at. And it makes it difficult for you guys.
It does. It does.
Right? One mortgage term you wish didn't exist.
What's your rate? I mean, even agents will text, hey, what's the rate today?
Yeah.
I'm like, that's between 5 and 8.
Yeah. Yeah. Right. Exactly.
I mean, what are we talking about? Is it
Yeah.
a first time home buyer? Do they make
Yeah.
under this income?
Mhm.
What's their credit score? What type of property? Where is it located? Is it in this census tract? I mean, there's so many things that go into it right now
Yeah.
that there is no answer to what's your rate.
What is your response to that? What do you say?
I always will take the high road and I'm like,
Yeah.
well, then explain it.
Yeah.
They don't know any better.
Yeah. What's your most controversial take on the real estate industry?
The barrier of entry into real estate is extremely low.
Mhm.
And that's not realtors, that's lenders, that's realtors, that's, I mean, the size of the transactions we deal with.
Yeah.
And to not have the education and the ethics and all that behind it is actually, it's criminal to a degree.
Sure.
You've got people that are getting taken by, let's say, Rocket.
Yeah.
Like, oh, well, I'm getting this rate of 5.5, not realizing they're paying $20,000 in points to get there.
Yeah.
Until it's too late. There was a stat recently about how many loan officers didn't renew their license this year, and it was a pretty significant drop. And I'm
Yeah.
like, well, how many of them just got their license to fuel the refi?
Yeah.
Like during the refi boom, all these online lenders were like, just go get licensed and you can help all these people. And
Yeah.
ultimately, it just becomes a big sale
Yeah.
thing. I just think there should be significant more to get into it. I mean, an appraiser has to be an apprentice for a little
Yeah.
bit, and they have to put in so many hours
Mhm.
before they can actually put their name on a report.
Yeah.
Why isn't there some kind of apprentice requirement for the agent? And
Yep.
same with the lender.
What is Bellum doing in the coming years?
We want to expand with the right people.
Yeah.
Like, it's not if you know how to do loans and you want to come here, that's great. But like, we do want a good fit simply because we don't want to put a bunch of layers and management in place just to manage people.
Sure.
So we want good people that want to like grow. We are very different in the sense that like we push each other to be open and share. If you did something well last week, I want to know about it. I want everyone else to know about it
Mhm.
because that's going to help us.
Yeah.
Young people that are coming in, like the one young guy in our office, he's just like, God, I'm learning so much just from you guys talking. We do a good job of getting everybody on sales meeting and then try and bring everybody like
Yep.
bring something you learned last month. Usually it's something I screwed up. Like, hey, don't make this mistake because that's what I did. Like, I don't think there's any limit to where we want to go,
Yeah.
but we want to do it in the right fashion with the right people.
How many states are you guys in currently?
Physically we really have Annapolis, Fairfax, Rockville, and then we have a DBA group that's in Texas and California.
Okay.
Now, license-wise, it's kind of like New Jersey down to Florida.
Mhm.
and then some sporadic states. So California, Texas, Idaho.
Yeah.
So we're not afraid to grow anywhere.
Yeah. Hey, listen, I thought it was very insightful. You've had an amazing career. Thanks for coming
Thank you,
in.
man.
I've enjoyed
Thanks for
my
having
time
me.
getting to know you over the last couple of years. If people want to get a hold of you and work with you guys, what's the best way to do so?
Email, phone, anything.
Hey, appreciate you, man. Thanks for coming
Absolutely,
in.
boss.